Give it 1 minute or two, then I'll start. G'day guys, Sam here from TradeToProspa to give you another crypto update. It's not easy at this point of time, but we've talked about a few scenarios, and what I'm going to cover today is obviously the greater market, like the Dixie and the SP 500, see how it's going so far, what's likely to happen. More importantly, I suppose what you're after is when to go bullish and what are the critical levels. And I've got my channel here. This is a perspective. It's not the only perspective. And in the past I've aligned it with the previous level that we dropped, and so far it is lining up. And I can explain how that's lining up so far. And in the other videos I did talk about this structure, one of many structures. And you can see how many things are confluent. And right now we're on this middle layer, and if we drop that layer, then we'll talk about that. The RSI obviously has a bit of information that we can explore, and we can look at a few other indicators, and then we can pretty much wrap it up from that perspective. So this is just this presentation is more about scenarios that it's likely to play, why we're bullish, and when you're supposed to go in big time, when you're supposed to put a big amount of money into the trade. At the moment, I did call this out some time before I even came to this level, that this is going to be a strong resistance. There's a few scenarios why this is a strong resistance, and I'll probably bring one or two of them out. Why this is a strong resistance? It's not just a daily level. It's more to do that. There's a moving average as well, a strong moving average that's playing that as well, and you can see from historical perspective. All right, let's begin. Let's look on the small time frame and see what's going on. So you can see from this chart, and I'm not sure if this is the best chart for the small time frame. Give me a sec. This is the smaller time frame, And the method that we use is Fibonacci, pretty much. And what we've done here worked out to be that this level, which is about what is it, 20,650 to 20,700, is the key level to break now. We have this what tends to look like is a bearish structure. I've got this line so far, line in the sand, that's maybe potentially where it's going to go really bearish. So far we're finding support, but when you look at this, we have let me just go to a different color. We have one support level, we've touched it twice, not third, but this is the third touch, and so far we only had one touch to the top, or you can say a double top. The other aspect to this structure is that on the golden ratio from here to there, the 618 was evident. So when we had this strong move to the upside, when we break this channel, the bears were ready and they just shorted it big time. I missed that out. Doesn't take long to miss it. It's very quick. And then you get this grind. And again, now that we've got the macro, Fibonacci, and the 618, again, 618 is doing it again. Here, the point 038, that's a 0.5 fib level, again rejection. So it seems like we're in this small section in a pivot. It's either going to go to the upside and go to the downside. And then we'll work out, okay, is that the second touch? And I do think if we were to go up, it's going to be volatile soon in 6 hours when the Fed, I suppose, gives its data. Give me a sec, where is that? And let's see what the time is on it. You can probably use that link as well. So this is a link, and we've got 6 hours and 18 minutes. So still counting. Okay, there it is there. So when we look at this structure, small time frame, it probably makes sense to go bearish if we drop this, and it's likely to find support on this or just go through and just come back down. This channel is pretty interesting as well. It seems to be working, so I'll give you a look at that one as well. Let's see how that turns out to be. So if we look at this, so similar to the other one, let me get to maybe the 4 hour might do the trick. And you can see from a channel perspective, if it comes up, I use from a macro perspective, I did the pitchfork, and in the middle, this is the middle channel, and it's not there yet, but that's going to be a strong resistance as well. And we've got this line as well. So if I was to extend this line, this blue one, it is a fib level, and it's flush as a resistance as well. As you can see, it's got confluency there, and now there. And if you look at the blue line, you can see that this is still work in progress. And if it comes down, well, we're going to have the middle section likely, and then we'll come back down here for support. So we might go sideways a bit longer, but I thought this would be the only opportunity to go up. So when we look at our other chart, you can see from that perspective, this is an important line right there now. So we'll give it leeway for this to drop. So this is a a very important level to hold. So it's trying to hold there pretty much. But we also have, and if I can bring it out, let's see if I have it. We have a bit of support. I'll bring it out on the daily. Give me a sec. Let's go to the daily. Let's enable them all. Did I miss one? So we can see the moving averages all are below support, as acting as support. So let me remove this for a sec. Maybe I played around with them in the past for different perspectives. And where's my 20? That's my 20. And what I want to do is, oh, it's on the 12 hour, okay. And what I want to do is, I think it's a weekly. No, it's not that one. Annoying. Give me a sec. There we go, the 21. So we can hide all these. Let's see, because there's too many of them. So I got the 21 weekly moving average acting right on that resistance, like you can see it. It's really acting as resistance. And realistically, you can extend this line further. And let's pick this line. You can see how that's working out to be resistance. So if we break above that, and we break above this daily, so this is going to be a very strong move. If we break above it, we're going to continue on to the next level. So we've got a number of levels of resistance, but this channel, so then the next level is this here. And you can see that this is a daily level. It's also potentially flush. So if this has a momentum and it breaks above high, then it will look to test it, and then potentially here. This is going to be the strong resistance level, because we had that strong move, liquidity, and but I do believe if we get to those levels, so that's 22, mid 22 to 24 is where the big lines are. So what I want to do here, not sure what disappeared, is on a free day. Not sure what disappeared. Oh, is it this one? No. So I've got this channel here as well. Give me a sec. So that, to me, is an important level. All right. So you can see how when we had this Wyckoff move, accumulation, selling climax, we rallied and we found that level of resistance. You can see how it's got confluence with the 618. So if I was to do this, see this 618. So I got this channel from the top to the bottom, and I've got my Fibonacci's all along these levels, and you can see how they work. Yep. So these fibs, and I've got my 0.5 that's acting as support. You can see how this channel finding support, macro support, even this wick gives it a clue. It was resistance. Excuse me for a sec. I feel like sneezing a bit. So when you look at this chart, when can we go bullish? When we break, in my opinion, when we break this channel altogether. So I have my channel here. If we break this channel, it's a change in trend, as far as I'm concerned. Let's just clean it up a bit. So you can see my blue lines, level of resistance. This is going to be a strong resistance level. And if we can get above that, and you can see how, if I was to do this as well, you can see the formation, the squeeze. There's no reason why this can't go all the way up to here and then get rejected. Pretty much same scenario here where we had a bullish moment, rallied all the way there, and then came back down. If we can get above this, that's when we go bullish. And then we have these fib levels and this channel and this level of confluence. There's a number of levels of resistance, but I would say that if this was an Adam and Eve structure, then it should continue on and then come back down again. But that means that SP 500 and the likes will go bullish. So this level here is about 24, close to 24,000, sorry. That's when I'm going to go bullish. And I've entered this small trade. I'm still in a fair bit, but not much. Not like, what's the word? Probably less than 50% of my account is in. I just traded this breakout and I'm in the profit. And we'll see how we go. If we drop, then I got my stop losses. So pretty much looking at this chart here, you can see it is similar. It's like an Adam and Eve potential, but we need to break each level as we go. And if you can look at this channel, it makes a lot of sense. It makes sense that we break the channel and we break this macro resistance trend line, then there's no reason why it can't be bullish. This does look like a bottom formation in the making, but also could be this as well. So you've seen this in the past where we could do number 2, 1. So what we've done so far from here, we've done that or that. It's a variation to it. We could have gone straight up like that, and we're looking for this and potentially come down. So if we get a rejection here and we break that, it's going to continue down. Similarly, this could be the level and this could be the level. There's a number of levels, but obviously not here. This is a bullish level. So if we hit that there, then even if we get knocked back, we can still probably hook up. So this model is the bearish model I've got in mind. And obviously this one here is an Elliott wave count of a triangle or reversal structure of some sort where we come from the top, we find our bounce, find our support like that. It can go, so it could be the 1, 2, 3 movement, or we have another down and then up. And this doesn't have to necessarily be to the bottom. It could be anywhere in that range here. So that is a reversal structure, potentially. And for being confident to go along, well, it's that level and this channel. What happens if we continue going sideways? That's going to make it more difficult to measure, because now this channel is invalidated, and this is the longer it goes, the better, I suppose, of accumulation. But we'll take that from another perspective. Now, what we have that's bullish, as you can see on this 3-day, is that we broke above the 50. But can this come back down and then go? All right. So the 3-day we could get a rejection and come back down to this level, and then we have this, I suppose, structure. Let's have another look. So this RSI on the 3-day, we've got the 3-day candle. We have another 12 hours for this 3-day candle. If it's bearish, like if it's engulfed the previous candle, then you know that's a rejection. At the moment, there's still more to go, and you can see the RSI. It's a bullish move, but there's no reason. If it goes like that, that's obviously a fake out. And that is it. The daily needs to be broken first, and we have a number of levels still. It's still not a bearish market. It could still do that, and the bulls could still come back in. So it's difficult to trade this. But from my perspective, to go long, you want to break this, and you want to break that. All right. Let's look at the Dixie, and what is it telling us? So if you are familiar with my Dixie, this is the weekly chart on the right, and you can see on the weekly, the RSI has found support. So there, that was a pivot point there, and that was a pivot point there. So we're getting pivot points lined up. Now, this needs, it's lost. When you look at this, it's lost this trend line all the way across. So that's a bearish component, but that could be invalidated if it goes back up this level. So on the weekly, you can get a rejection like that. So that means that, yeah, we get a rally. We can probably continue going higher, maybe to the 618 level, and then get another rejection. So I've had this head and shoulders structure so far. This neckline is the difficult level. If you know swing failure trades, this is it. It's going to retest that probably and get a rejection. That will give Bitcoin a momentum if we get a rejection there. And that might mean that this comes down further to the weekly 20 moving average, which is down to the point. So what we had was support on the 0.5 fib. It might come back down here, but nevertheless, that could be early signs of weakness. We've got the MACD crossing over at the moment, but we've still got 2 days. So this could easily cross could come back up if there's a bullishness. It's also, I suppose, it's all dependent on what the Fed says and so on. But you can see how Bitcoin's question mark about going bullish or bearish is also dependent on the Dixie. And the RSI has pretty much confirmed that as well. My gut feeling tells me that we're going to go bearish short term. I think this is going to still go up a bit. But is there a trade there? There was, but we missed it. And that was that rejection on the smaller time frame. So if we go here, this was a good opportunity right there for short, and this level is going to be strong resistance. So we'll go back to the Dixie. We've got to see how that goes, and you can see also, very potentially, even if this does get a rejection from that point, we have this formation as well. anything could take place. So we have our A, B, C, D, and this could still go up. So that this level could still be, even if we get a rejection here, if this goes up and get a rejection, come back down to this level, it could still be a descending wedge formation, and it could still go up. Maybe from here, this level here is, where is it at? That's, yep, that means this level. If we get this type of thing where it comes down, we could still get a bullish move. We've had a few along the way of pullbacks and on the weekly, and we still go bullish. Now let's look at the ES or the SP 500. US dollar there. Dow Jones has gone very bullish. So we've got the double bottom, or the W. But you can see we've got it's at the 200 daily moving averages. So this is going to be very tight. And you can see SP 500 futures, again, key level, like I said in the past, the 618 level. And if this starts to come down, it's already hit the target for this structure. This was a structure, this was a target. I called it out some time back, and it's hit that structure's target. So this target is being hit. Then if it's a measured move, or close enough, maybe a bit more. Let's see how we go. Yep, probably a bit more to go to that level there. It's a bearish candle. So yeah, got a bearish candle, but the 618's knocked it back. Okay, so indecision at this point. But if this was to come break the 0.5, it's at the moment, that's what it's doing. It's holding at the moment. It might do it. So what we've got is free impulses, right? And so if we have this, that's first impulse, second impulse, third impulse. That's not good. Because this, okay, well, anyway, small time frame, very similar to this, the futures. That was the, oh, okay, that's the futures. And you can see my channel from this one here. It could hit the top of the channel and come back down. What else have we got? That's the Dow Jones. Dow Jones is much more bullish. However, it needs to break that RSI. And on a small time frame, we got a bit of rejection. What's this? Is this live? It's not live. Okay. Let me see if anyone got questions. No questions. And here's another chart I want to share. This is USD or Tether dominance. So Tether dominance broke this channel, but it's finding support here, and it's good to keep an eye on this. So from this perspective, it might just go up a bit and find some resistance. So what we can do there, Tether dominance. Oh, bugger. That'll be better. Maybe from there to there. So that's our main level there of resistance. So this could still go up to have a dominance before it gets a rejection. Nothing's really clear there. probably the most lined up structure. I think that point there. Yeah, so if this was to come up, this level confluence could come back down if it's that bullish. Obviously, this is the level that needs to be broken first, but it seems to be doing a cup shape. We'll see how it can go from there down or there. And what we have on this bottom right corner or bottom left corner is total market cap. We have our support there, support. This is our macro trend line. We had our support there. And the question is, do we find resistance on this trend line? And so far, it seems to be the case. It's hit it and we're finding resistance. We can probably just fix that up. It's not going to be the best perfect, it's the best fit line. So that sort of lines up. And even the total market cap line thing lines up. I'm not bullish at any time. It does look like a double W shape, but these don't necessarily mean it's a bottom of the market. We can still come down like this. Let's see. Here we go. So what we do is we have a bounce to the neckline of this max distribution structure. So a distribution structure is this top. That's obviously the level that it breaks, but this level here, we've got a rejection and probably get the second rejection, and then we'll come back down. So we have room to the upside, but I don't think the room to the upside is going to be that much. So this, if Bitcoin was to break above this level, even how much percentage is that? Let's have a look. That's another 15-16%. And then I think it will get a rejection. And if we were to break that, we can play that imagination from here. We can go all the way to the top. Let's just do this. Reverse that. We've got a 0.5 is probably the main target, which is about 35k, I think. But if we break this, and you can see how these Fibonacci's line up. So this level is going to be a strong resistance. This is a point of control for that, volume control. So that is going to be the next level if we break this level. And then 0.5, I think we'll get a rejection. And then we go further down, and then we'll look for the bottoms. I think the bottom market will be there. There's a lot of reasons for me being this way. I do believe that this is a 1, 2, 3, and what's the? Let me just get it out. If this is our 1, this is probably our 2, and this is our 3. Okay, and then we need a correction. Where is the ABC? That's going to be the hard part. We probably get an A back down here, a B, and potentially down a C, and then our bull market starts. So we might get some sort of rally. Just playing the bullish scenario. If you want to see this scenario, we can probably play that out, and then we have that structure move, and then we go bearish, and we play an ABC correction, and then we go bullish. And if we look at this structure, if this was to go further down with the A there, then we'll get our B, and then even C will come further down. And then we'll probably have something like that. Move this across. So we just need more questions to this puzzle. In normal circumstances, I would think this would be the bottom, but with the inflation rates and unemployment still high and the interest rates are still low, it doesn't make sense that we are anywhere close. So this is historically, this is what we had in the past. This is the unemployment rates as well, and you can see every time we hit a bottom, this was high on top. So this is I suppose US yield index, and each time we hit a bottom, we had these spikes, and at the moment we don't have this spike at all. And so the yellow one is also, so that's SP 500, and also obviously this is the ISA. I forgot what was the details to it. I won't go into it right now, but that's what I have. Unemployment not low enough. Oh, sorry, high enough. Let's look at the monthly chart. Last thing I want to cover. And this. Okay, so from the monthly perspective, you can argue about this channel. It's just one perspective. However, if we were to take out the indicators, and this is what's probably more important, from the monthly perspective, we are getting a bit of a bullish overextension, but that doesn't mean, let me just see, got the right color. Let's get yellow. We're going to have a look at these levels here. We're going to talk about this from a monthly perspective, and then see if you want to trade the monthly scenario. So what we had in the past, the previous bottom over here. So what happens is when you get a selling climax, RSI is at the bottom, but that's not the bottom. It just means that it's the beginning, and what we want to see is a bullish divergence take place. And in this case, there is a bullish divergence. So price is going sideways, but demand's going up, and that's when we get the move. Okay, so RSI, that's how it works. Just because it's at the bottom, it doesn't necessarily mean that's the bottom. When the RSI is at its lowest point, what you want to see is a bullish divergence take place. We'll have a look at the weekly as well, or 2 weekly, sorry. Similarly here, when we hit the bottom in this space, RSI went all the way down. And if we look at this chart up close, I want to just clean it up. You can see that point, and you see my line, the white line, and you see this point is a yellow line, and you can see how when we went much lower than the other two, and when we went up, we got the rejection based on this reference, right? So the RSI is not showing bullish divergence on the monthly. These were. On the monthly, these were bullish divergence. This one was just a bounce, like there was no chance to get a bullish divergence, and that on the monthly perspective, that moved very quick. Here, there is no bullish divergence, or maybe a little, but you can see that if you want to be bullish on the monthly, we need to get above this level. So this could come back down and then up. So I'm keep an eye on that. And historically, when we look at this, my vertical lines, this candle was the start of it. So you can say roughly there, this candle was the bullish indicator. And you can say that's roughly there. So you can see similar levels. This was the candle that went bullish, and obviously it was just a bounce. When we dropped this level, you can see how much we went down further. So maybe we can argue that it was this candle. Stop it. That red candle there. And we can say it's slightly higher there. Now, interesting enough, I just saw something there. Okay. There we go. So that was the signal to go bearish from that perspective, RSI. Does it mean that we have to go all the way up there? Who knows? But first thing is we need to see this break. To go bullish on the monthly, we need to see it break this level there. And sure, it can do it, but if we look at the other chart, where is that? It might mean that we for that to be bullish, we have to break this red part, this red trend line. So if it aligns with that at the time, so when we look at when the red line, the trend line is broken, we need to check this RSI. This RSI, this last bit of it could easily turn up or down, this red one. So it's early in the month, really. So it's just going sideways at the moment. It's not pointing in any direction. So that's from a monthly perspective, what to look for to go bullish from a monthly. Let me just do this for a sec. I want to save that. Because I didn't notice this line before. So that's interesting. I'll see how that comes out. All right. Now let's look at the 2 weekly. So midway. So on the 2 weekly, I'm not okay with it. That we need to get rid of. Get rid of that. Okay, this is a monthly. This is a 2 week. Oh, I put it in the wrong spot. Okay, should put it there. Actually, that's not bad. The bullish divergence there. So in the previous bottoms, you can see these 2 weeks ones. We had a structure, a breakout structure, and it went to the upside and then came back down. But we had this ongoing bullish divergence, and that's working out well. So you can see how long that just went sideways. No run. It just went sideways for some time, or up with an uptrend. This one was a shorter spell, and obviously this one's a distance. So they're all very different. I hate to say, but imagine we're going to go through that over here, go sideways all the way through. It's possible. But when you look at these, that's a macro. That took longer to become bullish. And if we look at that, it's just as a reference. It's really started to get going after 800 days. So there's still bullish, but can we use this? Probably not, because the circumstances were very different then. But the trend line's there. So when we look at this, that structure, there is a structure there on the RSI, and when it broke it, it was done. Yep. So let's put that back there. And here we had the horizontal level. So once we break that, this red line signifies the breakout. and then we crossed the moving average on the RSI. Both confirmed that we're going bullish. So this one did break out, but it came back down. So there's two lessons to be learned. Now, when we look at this on the 2-week, it's actually crossed over the moving average. And on the 2-week, it's bullish divergence. However, we want to see a break above this level. So we might, on the 2-week wise, we might just get there and then continue on. If we break this horizontal level, that could be the signal. Very similar to this. We already achieved that with the crossing over the moving average, but we need to break above this level, which signifies their previous bottom, and then we can be more bullish. Does that line up with the previous chart? Here it does. So these are the signals that I'll be looking for. If that makes sense. I should get rid of this color for the time being. Yep. So the candle's still staying bullish. It hasn't dropped, but that's 3 days. So let's look on the daily. So our 21 moving average is probably the key level that we need to break to go bullish. For this level anyway. The daily level and the 21 moving average on the weekly is probably so far. If we break that, you can see how it aligns with, where is it again? It aligns with this scenario. The RSI goes high. Now, just because we go high and we break out, it doesn't mean it's the bull run. This is why I don't like what people say. They think it's the bottom. No. If we look at the likes of the stock market, there's a big scenario where we can go really bearish. And if we say, even if we go up, there's no reason why it can't come back down. Yep. Well, we broke that. What happened? Come back down. So what we had, all-time high, and I remember I said it's a 1, it's a 2, and a 3. And then we have A, B, C. Similarly, this is our 1, this is our 2. How high will our 3 go? And then we have an A, B, C. And then we go. That's what I'm going from the historical perspective. It's a key thing that I don't think anyone's talking about. Let me be the first. Being an engineer in my previous life, analytics is probably suited for me. And so, yes, we could go bullish, but look at this. From this channel, are we in that channel for a while? Does that RSI fit that channel? So we break up to the upside, we break up, and guess what? This line as well. You just noticed it now. So this is a work in progress. So if this is there, that could be easily a strong resistance, right? And where do I get that from? All the way along. So this is the wicks. So I did my channel with the wicks. And if I was to extend this, there's nothing down there, it's too low. But then this level, where there's a lot of confluence with support, and support there on the candle, and you can see how that was a resistance. So it's aligned. So even if we break up here, this could be a strong resistance, and we come back down. And then we'll do A, B, C, and yeah, we're still in the channel. That's our first touch, second touch. There's no reason why we can't do the A, B, C coming down. So yes, I'm bullish short term, but I am still bearish with the stock market. So when we look at the SP 500, If you haven't seen my previous presentations, let's just drag that out. Then give me a sec. Where are we? Here we go. Yep, we can leave that. Oh, I got the same one. The Sigma. Here we go. So here we go. Definitely into the pocket, resistance pocket. I haven't touched this for a while. Yep, we've got a 200 weekly moving average as support, and again here as well. So the 21 monthly moving average, I've spoken about a fair bit, a few times, is the kiss of death, as they call it. So this is likely to be a bearish candle again, in my opinion. Can we go above it? We need to go above this level, and I think the only way we're going to go above that is mass printing. I don't think there's any climate for this to go up, really. And when we finish the midterms for US elections in November, then maybe the Feds could do anything. We don't know what they're doing with the money. They could be buying shit and just for help the government out. And then once they win their elections, they just turn it off and then back down. So I don't trust the government who wants to be in power, and the Fed's working with them, in my opinion. So even if this is artificially bullish, for all you know, that's what they do. I don't think they'll sustain it. I think they just want to win the elections and then back down. Once they get in power, they don't really give a shit. So this, to me, this is first level of resistance. If we get above it, maybe a pullback, and then maybe in this level as well. Might have two scenarios: the bullish scenario and then down, or the bearish scenario and just down. So we really, this should be bullish. It's a W. Should get to there, and then maybe down. No one knows, but until November's finished, December as well. I think traditionally November, December are bullish, so it might be enough for Bitcoin to break that level. So I do think it might be able to break this level. However, if the Fed is really bad, and if it's more than 0.75, if it's 1%, then this is going to plummet. So we've got 5.5 hours. All right. Oh, no. We don't want that. Not sure why that happened. Okay. What else we got? Let's look at Ethereum quickly. I'll bring it out. Ethereum is more advanced. However, this is my scenario where Ethereum, yep, that was over performance potentially, but that trend line, resistance, and it's confluent at the moment. So we might just, if it's bullish, we might just get there, and obviously this is another level of resistance, but I think wave 5 could get to there, and then we get a bit of a correction and then up. So that's the reversal structure for Ethereum. Very macro sell and climax, secondary test, and maybe the spring if it comes back down. Oh well, this could go further down. So this could be a bearish structure, really depends, but also a bullish structure in the making. So you can see Ethereum is pretty much aligned with Bitcoin, but more advanced. So this is in the next 5 hours, we're going to find out what's going to take part with Ethereum. And then if it's bullish, convert your Ethereum, Bitcoin to Ethereum. Let me have a look. Let's see how Ethereum is going with Bitcoin. So that is a bullish structure. Obviously level. You can see what level needs to be broken. This is the daily chart. So there is the grind line, and this is holding this level up. Here we go. So it's in a range, that's for sure. And if we go bearish, then obviously it's going to come down like that. I'll be ready to short that. But also looking to flip over to Ethereum for what Bitcoin I have at the moment. So this is this is going to come into to an apex as well. Who knows when that's going to happen, but that could be really bullish. If Bitcoin, or if we're bullish for the short term, we can find our breakout. That's our first touch. That's our second touch. Might get the third touch breakout or the fourth. See how that goes. That's pretty much what I have at the moment. I'm going to wrap it up on that. It's been not sure how long. If you've got any questions, pop them. Otherwise, I'm going to wrap it up, guys. And for those who missed it, could easily replay it. And it's on YouTube as well. So this is a structure that I'm pretty happy with. If I look on the weekly, I'm pretty happy with this structure there. The question is what's going to happen. Actually, one more thing I can do for those that missed out. You can see here, historically, this is a grind. This is a line that held, and the RSI was almost above 50%. It was pretty much a triangle apex, and it made the decision and went down. Here, it seems to be a bit more bullish, but it's still below the 50%. 50% we need to be above for changing trend. All right, so this, you can see how that came about. So this is a weekly chart. You can see the RSI easily being resistance. So we have a reference points. So we've got two lines. This line, see how that, as soon as it break that line, it went up. So these two lines are relevant. It's the second one that's going to needs to be broken past. If we can break past that, then it's more bullish. So this is the weekly RSI from that perspective. We'll look at the monthly and the 2 weekly, but we didn't look at the weekly, or I haven't presented it. Now on the weekly, you can see it's broken above. This might just come back down and retest this trend line. Very much similar to these ones here, where it's still a bullish divergence on the weekly. I wish I saw that at that time. I knew about this stuff, but not so. So if we were to break this, then yeah, the 50% level will be difficult to pass, but you never know. We'll see what happens. 50% is where everything kicks off. Yeah, and when we lose the 50%, it becomes really bearish. We had our little chance here, and you can see how everything lines up. As soon as we lose that level, the 50%, see how it dropped? It's a changing trend. And see how it just capitulates. So we come down to a level on the weekly. That's pretty low. Yep, that was a previous low. And this one was lower, but we come back up. So there's a bullish divergence there. But like I said, even if we break up, it is it going to move like this one? So let's see what this, how much did it move from this level? It went up. Oh, okay, 300% back then. Are we in the same climate? This was quantitative easing period, so that was further printing to go. All right, but COVID, that was still printing. All this was printing money. I'm from so I suppose quantitative easing kicked in around. Quantitative easing kicked in around there with a mortgage crisis, and money print just kept making it go. Now, so I can't see that the money print is not going to keep going. So this is going to be a smaller rally, and so we got our first bounce. We might get our second bounce and the third, and then down, and maybe we get an ascending wedge type of thing. Just one of many theories, but I did explain my scenario where this is 1, 2, 3, and then we have our A, B, C. So this is our 1, this is probably our 2, this is probably our 3, and then we have A, B, C. And I do feel like this level, this area, is where we're going to find a lot of, this could be a double bottom, by the way, and then just go up. So 2024, I think, is where we're going for with the bull run. But I'm pretty happy with this chart. It gives you a lot of visibility. The Fibonacci is all lined up as well. Makes sense to me. It's one of my preferred charts. And you can see even the tops were 1.618 from many perspectives. So that's it, guys. I'm wrapping up. And anyway, good luck with that. They're also getting smashed, and you got to take your chances.